has sold to a credit customer. That is why we're having what? Trade receivable account. Do you understand what trade receivable account is?
No.
A trade receivable account is an account for a credit customer. Customer that bought from you on credit. Is it clear now? Yes. So we have trade receivable A, B, and C. So let's work on this first. The business sold goods worth of 50 to that customer. It's going to be what? A debit balance for the customer. Do you get it? Sales is what? A debit balance. Because the customer has received the product from us. Mommy, are you here? Do you understand the first stage here? Do you understand here? So now the customer will pay. Remember we said you debit the receiver, you credit the giver from the initial stage of the transaction, double entry system.
Yes.
So the customer has received goods worth of $50 from the customer, from a business. That's why we have our sales to be debit balance for that customer. This is the customer's account. The credit customer's account, which is what? Trade receivable or debt. So if the customer pays cash, now look at what happens here. The customer pays cash with what? $8. And there's what? Sales returns. What do I say here? What? Sales returns. Sales returns means that the customer has bought some goods and is returning it. There are different reasons why a customer will return goods. A customer might return goods because the goods are more, the quantities bought are more than what is being ordered. Or two, the products are expired. Three, the products are damaged. So these are the reasons why we have what? Return. Do you understand what returns is now? So because the customer is giving back the product to the business, it stays on what? On the credit side of the transaction. When the customer receives the product, we debit the customer. But now the customer has paid cash. You credit the giver $8, and there's a return. A sales returns or return inward. Sales returns of what? Return inward of what? $24. So what is the balance left? So 8 plus 24 gives us what? 32. 50 minus 32, that's 18. Are you here, please? Are you here, please?
Yes.
So here we have a balance carried down of 18 to cover up with our transaction, which is 50. Is it clear? Is it clear now?
Yes.
Good. Not all.
Now we're right on the CD.
You don't get stuck here.
Yes.
This is the sales for the business. The customer has bought on credit of the business. The customer paid cash.
Okay.
If there's no return goods, it will only be 8 minus 50. But the customer returns certain products to the business, which is what? Sales returns or return inward. For return inward to the customer's account, it's going to be a credit balance. Because the customer is returning back to the business. And we said you credit the giver. So the $8 plus 24, because this is the worth of the goods that it returned. So the worth of the goods that was returned is 24. So you had it with the cash paid. That is 32. So the amount you have to pay the business is 32 minus 50. That's how we got our balance carried out to be 18.
Okay, from where do you get that?
Yeah, that is the total amount of goods the customer bought. Is it clear now? So here we're going to have our balance brought down of how much?
No, not broke down.
Please. Next month, after this transaction now, this is the transaction that took place for this month. In the next month, the customer will pay $18. Is it clear? Yes. Yes, are you here, please? Then the next one, the customer bought goods worth of $60. He paid or she paid cash of $11. There's a return inward of 17. We add this together to get our balance. So 11 plus 17 is what? 28 minus 60. Minus 60, yeah. So we have 2. Then 5 minus 2, 32. So our balance carried down is what? 32. Great. Then our total third one, the customer bought $80 worth of goods. It paid cash of $26. Returns, right now, just focus. Returns of 30. You come to this side, please. You can't get it from there. You have a question? Return inward. Before you came in, we were talking about returns. This is sales. It's going to be a debit transaction for the customer. Returns is going to be a credit entry for the customer because the customer is giving back the product bought on credit. Reasons why customers will return goods. Stop writing this. Reasons why customers will return goods are the quantities ordered were more than what was brought to the customer. 2, some of the products are expired. 3, some of the products are damaged. So these are the reasons why you could have returns. I think that is clear. So they could ask you the exam, what are the reasons for returning a good or products? I just mentioned them. Now, the cash paid from the product bought was 26. Then there's a returns of 30. So the worth of the goods that the customer has paid is this plus this. 50, yes?
The reason why the quantity,
The goods.
is the quantity is more than what we needed.
Yeah, maybe I ordered for 100, you gave me 120. Okay?
Expired.
Expired, yeah.
And,
Damaged. I
That's
think it's clear. And those are the 3 reasons why a business will return or a customer will return. Because a business can also return. That's what we call purchases returns. When there's business to business, please take note of what I'm saying here, please. When it is business to business, we have purchases returns. When it is business to customers, we have sales returns. Is it clear? Not necessarily. Are you here?
Yes, yes.
When it is business to business, we have purchases returns. When it is business to customers, we have sales returns. Clear, right? Can I continue?
Yes.
Great. So we have 66, right? 56. So 80 minus 56. 424. So here our balance carried down this one 24 gives us 80. Then we have our